Okay, we're recording this video on Saturday, the 11th of March, 2023. Just gone 1:20 p.m. Chicago time. Do hope you are doing well. Whoa, so Thursday and Friday, what a couple of days. The collapse of the 18th largest bank in America, Silicon Valley Bank, certainly took me by surprise. Anyway, there was an extremely good interview of Chris Whalen, who is probably the preeminent bank analyst in America, by Jack Farley of Blockworks Macro. Came out yesterday, and it's extremely good, and I encourage you to go see that. I'll link to it in the description of this video. But I'm just going to take a clip of about a minute of that video to show you what Chris Whalen thinks is going to happen on Monday and what the Fed needs to do. So have a listen to him now.
You would have to fund the paper break even. In other words, you'd have to say to banks, whatever this bond is costing you in terms of funding, we're going to fund it at the coupon rate. So instead of making you pay 4% to finance at Ginnie Mae 2, we're going to charge you 2. Now, the Fed will obviously over time lose money doing this, but I would argue that they should, because, they created this mess. Thank you very much. And do we sacrifice the entire financial system on the altar of the dual mandate of Humphrey Hawkins? I don't think so. So, we need to step back and realize that the Fed has made some fundamental errors in judgment, and now these errors are starting to manifest themselves in the financial markets. And the only way we're going to get ahead of this is if the Treasury Secretary stands up there with Jay Powell and the other regulators and says, we're on it, we're dropping rates. And by the way, if you need liquidity and you're a bank, come and talk to us. The window is open. If that's not the message on Monday, Jack, then we have a problem. You understand? People haven't seen this kind of contagion in a long time. They don't understand how treasurers and others who have to, take care of their employees, take care of their fiduciary responsibilities, react when they don't know if their bank is going to be open next week. Okay? That's a primordial fear.
Yeah. Yeah, Chris, I've spoken with you often, and this is probably the most worried I've ever seen you been.
Okay, so there we go. That's Chris Whalen, what he thinks the Feds ought to do or could do on Monday. So that's going to be very interesting to see. A couple of points to make. The first one is that effectively the Fed over the last 10 or 12 years, back in 07, 08, they did everything in their power to save the banking system. And slowly, over the last 10, 12 years, they have been destroying the banking system, which has led to the collapse of Silicon Valley Bank because of quantitative easing and Fed policy. Now, obviously, Silicon Valley Bank is an outlier in that respect. You can see here, this is taken from a tweet by Chris Whalen a couple of days ago. This is Silicon Valley Bank exposure to mortgage-backed securities, and they were definitely an outlier compared to their peer group. However, all of the banking system is kind of holding on to these very low interest bearing assets, and it's a problem. And then here's another tweet from Chris Whalen, memo to Chairman Powell. Number 1, drop Fed funds target 50 basis points on Monday. 2, no more bank seizures, open the discount window wide. And 3, apologize for QE. Well, I don't think that's going to happen. But it'll be interesting to see what the Fed, with Jay Powell, Janet Yellen, do on Monday, because they have to respond to this. I'm going to show you a couple of charts just to see what the markets are doing in the meantime, because I think it's quite interesting, because we've got to look at bonds, gold, interestingly, and equities. So let me pull up a 10-year bond chart, 3,000 tip bar chart, which is the highest kind of tip bar chart for a look out on bonds. You can see that over the last 2 days, they've started to rally and rally pretty hard, which means rates are likely to come down. So this would suggest that Chris Whalen is correct, that the Fed's going to have to come in and pivot on rates and start talking rates down, or actually moving rates down in order to stop kind of a run on the banks. So we had this kind of whole setup happening over the last couple of days. The vertical yellow lines are the beginning and the ends of the week. So this is this week's activity here, where we were bottoming, exhaustion sell, bullish divergence, a flush pattern here. We're oversold again with a little kind of background in red. We've got blue professional bars coming at the lows and at the lows and at the lows here. And finally, we trigger into a triple signal here, and bonds kind of rally hard Thursday, Friday. So that's bonds on the tick bar chart. On the longer term time frame charts, the swing trading charts, we're looking at a 460-minute chart here. I've been talking up kind of bonds over the last several months. We were pretty strong bonds here, but we got overbought. Exhaustion buy, bearish divergence, exhaustion buy again, and they kind of sold off here with blue professional bars. So I had some videos kind of earlier on this year talking about this rally in bonds, and that we needed to kind of look out for that. So this was an important, kind of end of last year, important bottoming process here with exhaustion sell, blue professional bars kind of coming in, and we've retested into those lows there. You can see over the last few days that we tested exactly into those kind of areas of bounce. And over the last day, we've had blue professional bars kind of come in here. There were none at the bottom down here, but this is almost like kind of grab and go, kind of getting this move going. I know we've had a triple signal here, but on the short-term charts, we're just showing the kind of rally that's happening at the moment. So we'll have to see how this kind of plays out. But the Fed announcements, Monday morning, maybe Tuesday, is going to be really important. We're going to have fireworks there, kind of either way. So let's see what's going to happen to bonds, kind of going forward. The second thing to look at is interesting gold. So gold has also taken off with the same pattern as bonds. So again, beginning of the week's activity, we kind of sell off into this area 1815 down here, where we've had blue professional bars kind of stop the move previously, and we get triple signals kind of down here. The exhaustion sell bullish divergence patterns happened at the beginning of this move, not at the end, but it was an area of support. We're oversold, background in red. We get some triple signals, bang, we've kind of taken off with gold. So let's look at the swing trading charts for gold. And we'll go to this one here, which is a 460-minute chart here. So at the end of last year, 1650, look at all those triple signals going off, a whole bunch of blue professional bars kind of coming in, and we've rallied. And then people kind of took profits here in 1975, bang, they kind of sold it down. But we've come into this range here, above 1800, where seemingly we're holding, and we've had a strong rally in gold. So that's kind of interesting. So then let us look at the E-mini. I'm going to do that by looking at the daily chart all the way down to the tip bar charts. So over the last couple of videos, I've been saying I'm still bullish on equities in general because of these blue professional bars that came in at the lows. 3700 kind of stopped this move, and we've kind of just run into resistance on the intermediate time frame, and now actually we've found resistance on the highest time frame here. So over the last week or so, we've been in this downtrend here with the bars in white, kind of rallied for a couple of days, then we've kind of sold off, and this is Thursday, Friday's activity. So background is in red over here. We're just going through a dark phase at the moment where we need to catch somewhere between here and the 3700 kind of range. That is where this move ought to end, but we've got this resistance on the highest time frame here, which is not good. We've got resistance on the intermediate time frame that we've got to play out. So these things have got to come together for equities kind of find a hold. And who knows when that's going to come with some kind of blue professional bar, some kind of exhaustion sell signal. I hope not, but we've got to be cognizant of that. 135-minute chart here, you can see there we go. That's resistance kind of come in here on the highest time frame. All those blue professional bars were kind of sold off here. With Friday's activity, blue professional bars kind of selling us down. We're kind of stair-stepping down. So that has got to play itself out until we get that cross on this highest time frame here, which is the intermediate cross on the daily chart. 45-minute chart here, yep, you can see the downtrend. Blue professional bars up here, we test. End of trends kind of rippling through, bang, we sell off, come back here to resistance. It's a pullback and a downtrend on that intermediate time frame, just above 4100. Then we sell off really hard Thursday, Friday. Blue professional bars coming in here, and some amateur bars. Now, on the 15-minute chart, we're also, this is the week's activity here, beginning of the week, the end of the week, and you can see it's all Rambo patterns down here. So we're oversold on the 15-minute chart. We're below supports on all three time frames. We've got Rambo patterns down here Blue professional bars have not stepped in at the moment on the 15-minute chart or the 13,500 tip bar chart kind of down here, but we're definitely oversold at that point. So let us see what Powell and Yellen do Monday, Tuesday. Do they have to say something? Is there going to be some kind of rescue of the market? Is there going to be a pivot in kind of Fed policy? When you look at the tip bar chart of bonds, you definitely see that the market has anticipated that at these highs. We don't have any blue professional bars. Yes, we're overbought. We don't have exhaustion buy at that point. So let's see what bonds kind of do. And then equities will kind of follow along. But the bond market on these kind of time frames is looking super interesting at the moment. And is this going to be an important turning point with Fed policy that kind of changes the game for everybody? Anyway, go listen to the interview with Chris Whalen. It's extremely good. And over the weekend, going to be looking out for any announcements about potential press conferences or something like that by Powell and Yellen. So there we go. Enjoy your weekend. Looking forward to next week.